What's up, traders? Matt from the Trade Brigade here doing a technical analysis on ticker symbol ATER for Aterian Inc. On the left-hand side, we have the daily time frame, and on the right-hand side, the 30-minute intraday time frame. This is a chart we've covered semi-regularly now on the channel, and the main thing to discuss in today's video was the upside continuation we saw on Friday's session. This was, of course, all punctuated by relatively equal volume here, which, of course, is elevated from the major breakout that we saw here. So all things considered, still a ton of momentum, a lot of new eyeballs on this stock here as it continues to make this move higher. But that brings me to my next point, which is once something has gone parabolic, oftentimes it can be very difficult to trade. And if a pullback does develop, it usually goes to places people don't want it to go or even think it can possibly go. So please, if you're not already long this name from somewhere down here, just consider, right? If you were to be a buyer up here somewhere around $13 to $12, how many people could sell to you and still be in profit, right? If anyone loaded the boat down here towards 4, even up towards 6, we'll call it, right, in this general area of accumulation, then they're sitting on a nearly 100% trade, right, if they are holding up here towards 12. So they can easily sell to you, no problem, take some profits, and wait for the next entry. And you, being long up here, expecting it to go to, maybe some of our upside targets, probably not the best entry. That's all I'm trying to say in terms of risk management. I know it's not probably a popular opinion here, but it's what you need to consider whenever you're dealing with parabolic movers. So please be aware of that if you're late to the party in terms of not being long already. Now, I'm not saying there couldn't be a setup that occurs where you can get long, but please just think twice about buying the highs, essentially, is all I'm getting at. Now that negativity is kind of out of the way, what are we seeing here? I mean, it certainly looks like we could see upside continuation, and I know that contradicts what I just said, but based on the volume here, I mean, as long as it remains elevated, I don't see why it couldn't keep going higher. And we're looking at 14, right? That's the first area coming from daily structure off here to the left, scrolling back. You can see it was a breakout point for this little move higher. And then when we broke down, it kind of acted as a zone of support, then resistance here. So 14 does still strike me as important. And then after that, it's really up towards 1650, noting that this was the prior double top from in here, which led to a larger move to the downside. So I would expect this area here to act more as the more serious thorn in the side of ATER, and that's the best case scenario as long as volume remains elevated and there is renewed interest in this stock. Now, what about the pullback? If it does come, where's it going to go? Well, I would say a breakdown of 1120. You can clearly see how this was formed, right? Prior resistance from here and also perfect to the penny resistance, then support into the end of the day on Friday. If that's given up, then we're looking at this, right? Next up underneath is going to be right around 988, call it 10, this general zone in here. That would be probably the most ideal scenario on the pullback, but if it goes one more level below, then I would really watch out for 9 the whole dollar and your support trend line. Now, because we have continually made higher highs, the support trend line in that area there towards 9, that's going to be a buy for the higher low on the pullback. So if you start seeing hammers print there, indecision dojis, that would be a sign that maybe a reversal is happening down towards that area, and that would be a trade I would be willing to take with tight risk. Stop loss just goes underneath whatever reversal candles print at this general area of the chart. That's the line in the sand. If we really start taking that out, then the reason, I would say that's the line in the sand is because that's where this gap up came from. That's where really this breakout and new momentum started, right? So if we give that up, I would argue it's just back down into this range and not a place where I would want to be getting involved in this potentially for a long-sided idea. Now, that's all sort of the pullback areas, right? What if we don't pull back at all? Well, obviously, bullish consolidation just holds 1120, and we continue on up to the upside there, fulfilling and getting into some of those targets which we've just discussed in today's video. So those are my thoughts. Mainly, the main takeaway here is please approach this from a risk-friendly perspective if you're not already long. I really want to drive that home. I hate seeing people buy the tops. It's just never a good feeling. I mean, I've been there. I've done that. It sucks, right? So please, don't get fear of missing out. Play this smartly, and all things considered, have a green trading week. If you enjoyed the video or learned anything new, let me know in the comments section or by giving it a thumbs up. Don't forget our main channel is linked in the description, and I'll see you in the next one.